party started, right? All right. So my name is David Kushner. I am with Right Line Trading, and I teach people how to trade using the money flow tracker software that uses mathematical modeling along with artificial intelligence. Okay. This is the team over at Right Line. That's me up here in the top left-hand corner. Mark Miller is the owner. Rory takes care of all the internal stuff. Sergio is our programmer, and Charles is our tech guy. So David and Craig run other trading rooms. So before we get started, we have to do the disclaimer. So the disclaimer basically says that we're not getting any buy, sell, or hold recommendations. Don't trade with money you can't afford to lose. And everything we talk about is for educational purposes only. I am not a financial advisor, nor do I want to be. So everything I'm going to talk to you about for the next hour is about trading and how to make money from the markets. All right, keep moving. So like I said, my name is David Kushner. I've been trading the markets for over 25 plus years. I've traded stocks, options, futures, Forex. My background was I had an automotive parts business that I started when I was 18 years old, had that business for 28 years before I sold it in 2005. And since then, I've just been a full-time trader. So like most of you, you probably have a whole shelf full of indicator systems that came with a lot of empty promises of making you promises of helping you become more profitable and more consistent. So I was sitting in a webinar that you, just like you are, and I was listening to Mark Sachs. He was the developer and designer of the money flow tracker software. And I quickly realized that the methodology he was teaching isn't like anybody else's methodology that uses the same old indicators. But his tech methodology uses mathematical modeling and triple and quadruple screen analysis. So now I only trade with institutional money flow, and it's made me much more profitable, much more consistent, and now I'm running over 70% win rate. So the agenda that I'm going to go through is the money flow tracker software, the high probability setups, the unbreakable rules, how I trade breakouts and sidestep losing trades, the money flow tracker order trader, and how to pass the evaluations to become a funded trader. So John says, you know what, John? It's been a very tough market to trade. All right. So we'll get into it. All right. So those who stay till the end of the presentation, we have a very special discount plus some added software for us quick action bonus. All right. So do you ever wonder why some traders succeed while others don't? Well, in the world of trading, the difference between success and failure can be as stark as day and night. Let's delve into the reasons why some traders thrive while others stumble. Lack of a trading plan. You know, successful traders meticulously plan their moves. They know what they'll trade, when they'll trade, and how they'll trade. So without a solid trading plan, you're like a ship without a compass, no direction. Well, here's the thing about trading plans. Everything you do, you have a plan. So let's say you're going to the grocery store. Well, you have a plan. Where am I going? To the grocery store. How am I getting there? Well, I'm going to use my car. What am I going to get when I'm there? So I have a list, blah, 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 and so on. Trading has to be the same way. You have to have a plan. You have to take your setups when they show, because you can't pick and choose. The next thing is no edge. So an edge is a unique advantage in the market. It could be a specific strategy, technical analysis, understanding a particular asset. Traders that don't have an edge often struggle. So our edge is the money flow tracker software. And our edge is the software we trade only with institutional order flow. So when I talk about order flow, I'm only talking about institutional order flow. So anytime I mention order flow, it's institutional order flow. The psychological challenges. Trading is as much about psychology as about numbers. Fear, greed, impatience can sabotage even the best strategies. Developing mental resilience and emotional discipline is crucial. So we call it a mental mindset in the room, you know, and it's getting yourself in that mental mindset when you're trading. Okay, over trading. Excessive trading leads to exhaustion and poor decision making. So quality over quantity. So we have another saying, we have a few sayings in the room, that we're here to make money, not to make trades. And I will show you when we get into a little bit into the presentation, I'm going to show you my trade journal. Not adapting. Markets evolve, traders refuse to adapt to changing conditions, fall behind. Stay informed and flexible. Remember, trading success isn't guaranteed, but understanding pitfalls can improve your odds. So the four things that you need to create trading success are software to provide you with a competitive edge over all other traders. Number two, that edge has to track the direction of money flow. Institutional money flow. We are not trading with retail traders. We are trading when institutions are trading. Etched in stone rules to follow, and this will eliminate discretion and overtrading. And patience. This is the most important one. Patience to let this trade set up. We have lots of days where the markets are choppy, we don't get setups, and we don't take trades. So I'm going to break down the system in detail, but let me just show you a few trades that we've taken. Here's an options trade on AMC for 139%. And this trade was like 20 minutes. Another one on GME. Here's one on 30-year bonds. Here's one on the euro. So like from the poll, I think most of you are having a problem making money and being consistent. And why is this? It's because you don't have the proper tools to efficiently manage your trades. You overtrade, you revenge trade, you make impulsive decisions. This is a big one, okay? I don't do this anymore because when I hit my max loss for the day, I stop trading because this is what happens. If you don't stop trading, you will take another trade and you might make a little money on that one. You go, all right, well, I could get back to break even for the day. And then you take another trade, and that's a bigger loser. Now you're in the hole deeper and deeper and deeper, right? The next thing is lack consistency. You trade with indicators that lag price. You lack a mathematically proven trade methodology. And all these things lead to blowing up trading accounts. So my commitment to you is to bring this to an end. So why do they say that 95 to 98% of traders go broke or stop trading or give up? Because they follow the same old things that everybody else has been teaching that just don't really work. Price action, MACD, Elliott wave, divergence, Fibonacci's, all this stuff have no future predictive properties. And I am not saying that a money flow tracker can predict the future. I am not saying that one bit. But if you follow the rules, it gives you very high probability trade setups. Not every trade is a winner. It's impossible. So anyways, so Mark Sachs had over 15 plus years in the field of applied mathematics. He was a professor at Jefferson University, and after 8 long years, he engineered a software system and trade methodology that can improve your trade performance called the money flow tracker software. And why did he call it the money flow tracker software? Because it follows the money when the institutions are trading. And we have over 500 traders that we trade with between the 3 rooms, right? So I am going to share with you my trade journal. Now I use this online trade journal, and every day I go to my trade performance in Ninja. I download my trade performance. Here, I did the one for today here. It goes into an Excel worksheet and it imports my trades into this program. So here's the journal part. So these are the trade IDs that are imported from NinjaTrader, the time entry to exit, the market, and all this stuff. All right. So this is imported directly from Ninja, and it's a very helpful program. So let me go back to the homepage. So you can see that we're running a 73.19% win rate with a profit factor of 3.29 which is excellent. It's like almost 3.25 to 1. Let's say 3 to 1. Okay. And look at the days. So this was last month in August. Look how many days we didn't trade. 1, 2, 3, 4, 5, 6, 7 days in August we did not trade. And look what we did in August. $12,487. And we did not trade 7 days. Right? So people ask me all the time, well, if you don't trade these days, what if you traded these days? Would you have made a lot more money? And my answer is no. These days we did not trade were choppy, range bound, non-trending markets. We had no setups, well, we don't take any trades. We have no setups, we don't take any trades. Actually, it's 8 days because there's 31 days. I'm sorry. I was right. Right? We don't have trades. If you look at what we did in July, we did $13,800. And in July, how many days did we trade? 1, 2, 3, 4, 5 days. So you don't have to trade every day to make money. Here is my equity curve for the whole year. So it's a nice equity curve, little bumps along the way, which is good, I guess. And for the last few weeks, it's kind of flattened out, right? Because the markets have been so choppy and so range bound, and it's just been tough to trade. So this is my trade journal. Here is a report on performance by day over the last 6 months. And as you can see, we don't have that many losing days. And our losing days, I always like to keep them under 500. Sometimes it gets a little away from you, but look how many nice winning days. Here's a winning day, 3,200, 3,200. This is one of our best winning days, $3,500 in one day. But if you average it out, you'd probably be looking about $1,000 a day. And I stop trading when I'm up over 1,000, or once I'm happy with my results for the day, I stop. So let's keep going. The markets consist of many small retail traders, like these marbles of retail traders, plus one or more large institutional trader, which is the purple big ball, right? Why is this? Why do you want to trade with retail traders if you know that most of them lose money? Right? You want to trade with the institutional trader because that is the guy. Those are the guys that are making the market, are moving the market, not retail traders. Okay, so let's get into the software. So the Money Flow Tracker software has 3 key metrics that determine money flow. The first one is triple screen assessment of correlative markets using our AI program. The next one is triple screen assessment of order flow, institutional order flow, and triple screen assessment of the LIQUIDITY for momentum. So what do I mean by triple screen assessment? 3 time frames in agreement. So I like to say 3 time frame buy or 3 time frame sell. So once I have, I know that, then we move on. So the next thing is triple screen assessment of order flow, right? And that is one of the first powerful forces that move price. So when I say triple screen assessment of order flow, the first thing that comes to most people's mind are these candles with all these numbers on the right, the left, outside the candle, the bottom on the candle, upside down. You could look at these candles. I've tried to trade with these candles a few times. It's impossible. It's impossible for your brain to make quick decisions. Look at these numbers, interpret them, look at everything else on your chart, and try to make a decision on if you're going to take a trade, right? We went one step further than this, all right? And what I mean is triple screen assessment means that all time frames are in agreement. So our order flow candles look like this. If the candle has a green outline, it means that the delta of the candle is positive. If it has a red line, it means the delta of the candle is negative. And this will change color as the market moves. And let's say it might go up green, and then next thing you know, it turns around, turns red, goes down. So I like to keep things simple. And in the room, we keep things very simple. If we have a green outline candle, the way I think about it is we have more buyers than sellers in the market. If we have a red outline candle, it means we have more sellers than buyers. So in this particular instance, look, the market came up. This is the VWAP. Came up, bounced off the VWAP. Sellers thought they were going to push it down. The buyers came back in and pushed it higher. Right? So I wanted to take a screenshot of the way our charts look like. They're very clean, very easy to interpret. All our indicators are use these colored line charts on the bottom, except the bottom one, which is our modified Laguerre. And I'll explain that. But it's very easy to interpret. And you only have to have one chart up. So the second most powerful force that moves price is triple screen assessment of the Laguerre and using our hybrid candles. So again, triple screen assessment means we want to see the modified Laguerre going the same direction on 3 timeframes. And if you look at our candles, they have these lines in them, which nobody else has, Renko bars, with the price action inside the bar. So if you look at where the next bar opens at the same price as the previous bar closes, like this one, but not this one. This is what we call a pullback candle. And we use these candles for our advantage. And I will show you that a little bit further on in the presentation. So now we're talking about the modified Laguerre. The modified Laguerre is we took all these indicators, we added an algorithm to them, and developed the modified Laguerre. Now, the modified Laguerre is an oscillator, but it doesn't show divergence. It only shows strength of trend. So when the modified Laguerre crosses below 20, this line here will turn red. And when it crosses above and is sloping up, it will be lime green. And when it crosses above 80, it will turn dark green. And it crosses below and is sloping down, it will be orange. Right? We only trade on green and red. And we want it pinned at 100 or at 0. So we get the acceleration dots. Right? So now let's move on and talk about the quant lines. We have 2 quant lines. We have a short term and a long term. And our quant lines are using our AI program, also used to be called, years ago, they used to call AI neural network. And that's the third most powerful force that moves price. So what our quant lines do, they use 28 market components. They're examined by our AI system of correlation. Now, correlation is very important. Most people know about correlation, and most people don't pay attention to correlation at all. But we do. Okay, we do, because it just gives us higher probability when we're trading. So if the ES is going up, do you think that it would help your trade if you're in the ES, if NQ, YM, and RT, all the indexes were going up at the same time? You bet it would. This would help your trade. But let's say NQ, YM, and RTY are tanking, but ES is going up. What do you think is going to happen to ES? ES eventually is going to slow going up and probably end up following these going down. Right? It's like the old saying, a rising tide floats all boats, all ships. Well, it's kind of the same. If you have all the indexes going in the same direction, means the market people are buying the market. So you want them to be going in the same direction, and that's what our quant lines do. The quant lines are showed. The top one is the short one. The bottom one is the longer term. All right, so let's keep moving on. So we did one thing further. We went one step further, and we developed what we call the C2 indicator. And with the C2 indicator, it just adds another time frame. So for instance, if you're trading minute charts where everything is a multiple of 3. So another time frame would be 18 times 3. That would be your highest time frame. So instead of having a 3 time frame buy condition, now you have 4 time frames in agreement. And that's why when we take trades, most of the time they're higher probability trades. So the C2 indicator is displayed on the chart by this stair-stepping line above the candles. It will be green going up and dark red going down. The colored background means that we have 3 time frames in agreement. So if we have a green background, a green C2 means we have 4 time frames in agreement. We have the quants in agreement. We have the multiple time frame LIQUIDITY in agreement. We have the modified LIQUIDITY in agreement. We have our acceleration dots. These lines here are obstructions, pivots, higher time frame support, the VWAP, right? So let's put it all together and you'll see how easy it is to put together. All right, so the money flow tracker software. Now, the rules and the setups, and I tell people all the time, if you can follow these easy to follow rules, because the rules are really easy, you should have high probability trades. Now, I am not, and I'm going to repeat this, I am not saying that every trade is going to be a winner, because that would be a big lie. And I won't lie to anybody to try to sell them anything. If I'm using it, it's good, right? But you can't possibly have every trade a winning trade. It's impossible. You're going to have series of winners, you're going to have a few losers, you're going to have a few winners, but the thing is that you have to follow the rules and you have to use the ATMs and look for reasons to get out of a trade. So the first rule is the colored background. So like I said, the colored background has 3 time frames in agreement. We know that. We don't need to look at 3 charts to determine, well, is the higher time frame and the mid time frame and the trading time frame all in agreement? This is what I love about the money flow tracker software is I don't need to look at 3 charts. I need to look at 1 chart. Right? The next thing is the C2 indicator. We want 4 time frames in agreement. The next rule is the thick line is what we call the trend line, and the dot dash line is what we call the 15. It's a 15 moving average, but it's our 15 moving average. It's not just a plain old 15 moving average. And we use this to exit trades. Okay, it's part of the entry, but when it turns from green to yellow or green to red, it will exit the trade. Okay? The next rule, if you are trading into a pivot, higher time frame support, the VWAP, right? You must wait until it breaks there by 3/4 of a candle. And then you must have a pullback candle. And I will explain why we must have a pullback candle a little bit further on in the presentation. The next rule, this is the easiest part. Both quants need to be in agreement. The multiple time frame LIQUIDITY needs to be in agreement. The modified LIQUIDITY needs to be pinned at 100 or 0, so we have the acceleration dots. There's the setup, there's the trade. The entry would have been on this candle here. The exit would be exit on line change would be 63 ticks. That's $630 per contract, right? So trading with the money flow tracker rules. Now, this is one of the things that I've always loved about the software is it will keep you out of choppy, non-trending markets. And these are the markets where most traders lose money. You know, I've heard a million times, well, you know, yesterday I had a great day, I made a ton of money, and today I gave it all back, and then some. And then the day after that, I made some money today, and the next day I gave a little back. Well, I asked myself, why is that? Why is that? Because when you're making money, it's easy to make money when the markets are trending. But when the markets are choppy, it's easier to lose money. So it's okay not to trade every day. And we don't trade every day. You know, when we have great market share, we trade every day. When we have choppy markets, we don't trade every day. Okay, so let's keep going. So here's a trade that I took. This was on CL. Took this trade around 9:36 in the morning and closed it at 9:37, not even a minute. So it broke the pivot, got the entry on the pullback candle. First profit target is 10 ticks, so that's $100. Exited when the line changed, right? That's $55, 55 ticks. That's $550 plus 100. This one trade was $650, right? $650 on one trade. I trade 6 accounts. This was a great day for me. It took less than a minute. I didn't even expect this big of a move, right? But it just was one of those days where it just kept going, right? So the money flow tracker software gives you clear and exact entries, clear and exact exits, and you get all your targets all pre-configured and your ATMs. So now I'm going to explain to you how I trade breakouts and sidestep losing trades, and I call it the pull back and go. So let me grab my pen here really quick. And here, okay. So here we have pivot, right? The shaded area is higher time frame support. So look, the market's coming down. You get to a pivot. It didn't even blink at the pivot. It just went right down, right? And from looking at these candles with these little tiny wicks, this was a quick spike down, right? So what I do is I wait for a pullback candle. And when the candle comes back, when the wick comes back about halfway or more, that's when I place an order to sell on down close, right? That's when I put my order there. So why do you do that? Well, the market's coming down, right? And you expect it to pull back and go down, but what happens if it goes up? What happens if the market continues, goes up? Well, this order, if this candle went up, as soon as this candle closes up, this order will automatically get canceled. Follow me? So a lot of time, when the markets break down through a support, they tend to pull back to that support area. And if it is a stop run or a liquidity grab or whatever you want to call it, right? Then the market will go back up. So what we're doing is we're placing our order on the pullback candle, telling the market, okay, if you're going to go down, prove it to me. Prove that you're going to go in this direction. Otherwise, I'm not just jumping in the market. And that's what works so well. So here's one on RTY. Market broke, pulled back, first profit target, second profit target. Here's another one on crude oil. Here's two on the Canadian dollar. Right? So now we want to talk about the money flow tracker order trader. It's really, I'm going to change my shot because it's really called the revolutions, and we call it the Revo for short. Right? So what does it do? Right? It follows the rules that we just talked about. Right? Here's a trade that it took for 704 ticks. Here's a trade it took for 665 ticks. Here's another one for 1,016 ticks. Here's another one for 792 ticks. But what does it do? So I am going to go back here and I am going to open up the strategy. Okay, because it's easier for me to show you on the strategy. And I'm going to load my template. Doesn't matter, this one or whatever. Okay, so I'm going to load my template. Why did that template load? Let's do this one here. Okay, now I know that one loaded. Okay, so what is this telling us? Well, we want the bias, which is the colored background, and we want the C2, so we turn it on. We want the LIQUIDITY to be red or green, so we turn it on. We want the multiple time frame LIQUIDITY to be red or green, so we turn it on. The 15 red or green, the 50 red or green, we want everything to be in agreement. The MA diff. So the MA diff is important, and I'll explain to you what it is, it's how far away from the 50 is the market. So when the MA diff gets too high, and we have different numbers that we use, this is for this MNQ swing trade, we use a very large bar on this. So we look at the MA diff. So when the MA diff gets over 350, it will not take a trade. Why would you take a trade? Why would you want to, I would never take a trade when it's that far away from the 50 because I expect a pullback, right? So the MA diff is shown on the chart like this. Oh, I can't show, right? So anyways, we want to clear the pivots. We want to clear the higher time frame support and resistance zones. We want the quants in agreement, both red and green. And this number here, the first target value, is very important. So our first target is 80 ticks, but we have to put 81 because it has to go through to get filled. So what is 81 so important, or whatever it is, the number, is because it will not take a trade. So let's say, for instance, you got an entry signal on this candle. If there's not 81 ticks to this pivot, it won't take the trade. It has to have at least the first profit target to the next obstruction, a pivot, higher time frame support resistance, the VWAP. I have the VWAP turned on. It won't take a trade if there's not at least 81 ticks to that support or resistance area, which is important. Also, you can have it turn on and off whenever you want. I don't do that. And it has built-in money management. So we have lots of people that have jobs still, and they subscribe to the money flow tracker just for the order trader. And let's say that they do it like this. They put in 1,000 and they're willing to risk 300 for the day. So what it will do is, let's say you're in a trade and you're up $1,500. It will keep you, it won't exit the trade because it's over 1,000. Okay. But let's say you lost 300. It won't take another trade for the rest of the day. Okay. And then it has pause trading. So what I do is, if I'm in a trade, if I exit a trade, I don't want it to take another trade for at least 3 minutes. I want it to wait. It's a time and contract. This is all about your targets and all your stuff. And you know, this is this is what it does. It follows the rules that I just showed you, and it works really well. Right? Here's the equity curve on the auto trader for 2021 and 2022. I lost all my data that I had for 2023, so I don't have that. So here's a trade that I was in, and I recorded it because when I took this trade, it hit my first profit target really fast. And I said, you know what, I want to record this because I think this is going to be one of those big trades. So I recorded it. I'm just going to go fast forward, right? So it's in the trade. It already hit my first profit target. The stop goes to break even, right? So now we're up 235 ticks, right? Now we're up 323 ticks. Now we're up 532 ticks, right? Now I'm going to stop it there. I'll go back just a bit. Okay, right there. So I'm looking here, and I'm looking at the MA diff, and it's up at 413. So I decide to move my stop closer to the market. Right? So it went up a little bit more, and I exited at, it's up 489 ticks, and it kept going up a little bit more, and it got to, we ended up exiting 570 ticks. So we traded 4 micros, took 2 off at $80, so that's 80 bucks, and took 2 off at $570. So that's $650 on this one trade, and the auto trader took care of the whole thing. Right? That's why I love the auto trader. Okay. So let's see, David has a question. If I'm auto trading and I have loss limit of 300 and down 260 for the day, will the system take the next trade? Yes, it will. Yes, it will, because you're only down 260. I would have to ask Sergio about that. There's really no way to tell it not to. But let's say you're down 260 for the day and it takes the next trade and that trade goes up and you make 500 on that trade, right? So it, I don't know if it exits the trade at 300, period. I would have to talk to Sergio about that. Okay, so let's go to evaluations. You know, passing the evaluations, getting funded accounts is really in most people, it's in their head. The problem is in your head. The problem was in my head for a long time. But here's the thing, and this is important. Focus on the process. Don't focus on the carrot. Focus on trading well. Focus on your setups. Focus on executing. Don't worry about how much you could make. Worry about how much you could lose. That's the key. I have a friend that's a professional trader, and he tells me all the time, he goes, I'm on the floor exchange and these guys are running around like crazy and this and that. And all they're worried about, well, I could lose this much on this trade and I could lose this much on this trade. And they're never really worrying about how much they're going to make. They worry about their risk. They're risk managers. And that's what you have to be. You have to manage your risk. You manage your account. No, it's more important to know when not to trade than when to trade. Okay, Robert, I trade with Buellnox, I trade with a prop firm. Okay, you have to know when to trade. That's most people's problem, is they don't know when not to trade. They don't know when to step away. They think because if you sit down in front of your computer and the market's open, that you should be able to push that button. And that's so far from the truth. So if you focus on trading well, focus on your setups, the profits take care of themselves. And it's really kind of amazing how they do that, how it does, but it does. Right? The challenges and the evaluations, whatever they're called, these, whatever your company calls, are really designed to make you fail because of the parameters they put in place, like how many trading days to pass. And the main one is the trailing drawdown. The trailing drawdown. But here's my process. People think, well, I'm going to sign up for a Apex or whatever $50,000 account, and well, I'm trading a $50,000 account. Sounds great, very impressive. I got 10 accounts, so I'm trading $500,000. What? Who cares? I don't care, right? The problem is that you think your drawdown. So on a 50K account, your drawdown is usually 2,500. You're trading $2,500. Think of it as you put $2,500 of your hard-earned money in the bank, and you want to trade this money and build this up to whatever the $3,000, up to $3,000, and add it. You need to build your account to 53,000 to pass. All right. So my process is I never risk more than 10% of my drawdown on any one trade. And why? Because if you're a one-to-one trader, you have to be over 60% win rate to make money. If you're a 2-to-1 trader, you can be right over 40%. So it means you could be wrong 30% of the time and still make money. Right? If you're a 3-to-1, which we are, and we're over 70%, I don't worry about it. Okay, because I just don't have to. We have a good win rate, we have a good risk reward, and that's the reason why we're so successful. So don't risk any more than 10% of your drawdown, which means if I trade NQ and I'm using a 40-tick stop, I have to trade micros on it to stay within that risk parameter. So rather than avoid risk, take intelligent risk, and this will give you a competitive edge. Like this little mouse, he says, I want to get this piece of cheese, but if this thing flops over and hits me in the head, I don't care. He's wearing his helmet. So he's taking intelligent risk. So what is trading success? it equals financial freedom. You have no financial pressure. You work from home. You have no boss. You have no commute. And you have the advantages of being a full-time trader and working for yourself, which means if you just don't feel like trading one day, or you're just not into it, or you don't have that, your mental mindset is not there, then don't trade. See, me, it's different because I wake up every morning and I have to trade because I'm running a trade room and I'm teaching people how to trade and be successful. And some of them are doing great. Uh, so I have to always change. If I don't feel like trading one day, I have to kind of try to change my mental mindset, right? So look, now I've showed you the money flow tracker software. I've showed you the Revolutions Auto Trader. I've showed you the setups and everything. So if you're making money, continue on your current path. God bless you, and keep going. From the poll I took, most of you guys are struggling, need some help, need some software that's going to give you that competitive edge. So take action today and trade with us. And so the money flow tracker software. Robert, I trade with prop accounts. I already answered that, sorry. So the benefits and features of the money flow tracker software, it's easy to learn. You saw the charts, they're very easy to learn. They're very intuitive. Here's a chart. I'll show you this chart. This is a chart on NQ. Now the markets were crazy today. They were down huge this morning, and then they came back and recovered, recovered, right? They kept going up and up and up. And so this is today. This is on NQ. No, this is not today. This is October. I don't know why this didn't change. Oh, I'm sorry, that was natural gas. Ugh. All right, let me get another chart here. Now it's reloading, so I can't. It's like NinjaTrader does these things when charts are reloading. It doesn't let you do anything. So let me go ahead and put my presentation back up and we'll keep going. So it's perfect for beginners. It's perfect for any account size. We have lots of traders that just trade micros, and they're perfectly happy with that. And if they're happy, I'm happy. And you can trade futures, Forex, stocks. So for the first 10 traders that come aboard today, we have some powerful additional software. We have the market scanner, which this is my market scanner. So basically what this is telling me is, for instance, on gold, if we trade gold, we trade it on a 410-20 bar. So right now the markets are closed, or not real, nothing's really, it's closed. So it's flat. But just because it's flat, if this said buy, I would just go look at the gold chart, see if do I have a setup. And like on CL, we trade on a 2-5-10 bar. So you'll get the market scanner included. It's a $9.99 value. You get the NDT. Now this is the platform that we use. Okay, it's a strategy that we use to enter and exit trades. This is where we have our accounts, we have the market, our ATMs, sell on down close, buy on up close. You get the masterclass series on futures, forex, stocks, and options. We get 1 month in my trade room. Now, our trade room was part of a study by this Dr. Allen, and he reviewed more than 225 trading websites and evaluated them using several factors, including their transparency, proven track record, and assisting traders with educational materials and online support. And we came out on top. And this was published in Traders World and Stock Commodity Magazine. So here's our offer for today. And I think this is a great deal because I paid more. It's normally $21.97 a year. We're giving $1,000 off at $11.97. And why are we doing this? Because we want to make it less than $100 a month for people to be able to trade with the money flow tracker software and start making money. We have a lifetime. It's $29.97. We're giving $1,000 off of that at $19.97. And if you want to do a monthly, we're giving $200 off a monthly at $397. So for the first 10 traders that come aboard, we're going to give you the auto trader. We're going to give you the NDT platform, the market scanner, 1 month in my trade room, all the tutorials and videos, and your software will be installed by Charles and you're coached by me. All right. Now, let's keep going. I'm going to also throw in the money flow tracker minute charts as an extra bonus. So here's my commitment to you and actually to you and everybody in the room is when you subscribe to the money flow tracker software is to help you become a successful trader. Remember, if you're not successful, it's not your fault. Again, if you're not successful, it's not your fault. You're just not using the right tools to be successful. It's like trying to pound a nail in with a screwdriver. Yeah, hit it long enough, I guess it'll go in. But if you use the right tool, it goes in really quick. So one reason that I say this is using the right tool is you need to be able to track the direction of institutional order flow. And you need to be able to have high probability setups that use what do you call it? Correlation, and use the gear and use everything that we use. Okay, so the money flow tracker software is totally unique and will give you that edge of trade with institutional order flow. So again, my commitment to you is not just how to teach you how to read the setups. The setups are really easy to learn. It's but to help you with that mental mindset you must have in order to achieve financial independence. It's in your head. It's all in our heads. It's very, people think, oh, you just sit at a computer every day and look at the screen and push buttons. Well, it's not all that. It's a lot more to that. If it was easy, everybody'd be doing it, right? So look, here's how you subscribe. If you go to webinar, right? You go to webinar and you click on the chat on the very bottom. Rory already put in a link. You click on this link, get that out of the way, and it comes up with a direct link to the money flow tracker page. That's me. Right? You scroll down to the bottom here. You don't need a coupon code or anything. You set it all up, and let's say you want to do the annual. Just click on it. Right? And you'll see, ooh, Rory, you put the wrong link in. Grasshopper. Okay, so you click on the money flow tracker software, go down here, click on annual, there it goes. Right, it opens up this page. You don't need a coupon code. It's already applied. $21.97 minus 1,000 for today is $11.97. And then what we did was we decided, you know what? Next year in 2025, when you renew, we're going to keep you at the same rate, $11.97. We're not raising the price on you. Once you're part of our community, you're part of our community. We have a great group of traders in the room. And then you just go down here and you'll get an email. You'll make an appointment with Charles. He'll set up your computer. He'll do everything for you. Right? Or if you prefer, put your name and your phone number in the chat box, and either myself or probably Roy will call you after the webinar, and you can ask as many questions as you want. You can do your subscription over the phone. So when you go to this page from the link, I just want to reiterate this, is if you click on here and it takes you, oh, not, he must have just fixed it. He must have just fixed it because this wasn't working. He just sent me a message. They fixed it. So the link's working now. Just put your name and your phone number. I believe the trade room is $147 a month. it comes out to like $40 a week. But I call out trades in the trade room and people take, and they do pretty well from that. So it's well worth it. Here's another thing is I was never a big believer in trade rooms until I got involved, until I subscribed to the money flow tracker software almost 4 years ago. No, I don't really need a trade room. I don't really like trade rooms. It's just a bunch of bragging fests going on. Well, it's not like that in our trade room. We teach people in the trade room. I answer questions. I call out trades. It's important. I found out that it's important to have a community, a place to go every day where you have the same traders trading the same things. So if you put your name and your phone number in the questions box, Rory or myself will probably call you after the webinar and you can ask as many questions, right? So look, we all know that it's a well-known fact that most day traders and swing traders are losing money. This guy here, retail trader, he just flushes his money every day because most retail traders lose money. It's a fact. I have another guy that works at a trading brokerage firm, and he said, we love it when guy comes in, he opens up a $5,000 account, and he's going to set the world on fire, and you can just see it. He says, we know that within a month, that money's gone, but not our traders. And why? Our traders are making money. Because if the retail trader's flushing it, somebody's got to be taking it. And when the institution is taking the retail traders' money, which they institutional traders call the retail traders their guppies. Because why do you think they run stops? Because the guppies I asked him, I said, why do you guys, he says, it's not us. It's not that we do that. It's that the markets gravitate to where the orders are. Okay? The market gravitates where the orders are. And if there's a bunch of orders just below support, they're going to go down and grab those orders and go back the other way. So our traders are making money because we trade with institutional order flow. And that's the key. We don't trade with retail traders, we trade with institutional traders. So how do we know that when institutional traders are trading? Okay. See this number here on the bottom? Well, the markets aren't open right now, so this number changes and it resets every minute. So every minute it goes back to 0. So let's say on YM, we like to look at least like 350, 400 contracts per minute. So we know when we have 300-400 contracts per minute, it's most institutional traders are trading because we know when they're not trading, how many contracts per minute. So that's how we know. Totally unique, but that's how we know. So again, you get $1,000 off at $11.97. Lifetime, if you want lifetime, it's $19.97. Monthly, we're giving $200 off at $3.97. Hold on a second. Rory just sent me a message. She said, welcome, Sally, Robert, Wayne, Jorge, or Jose. I don't know. Anyway, sorry if I mispronounced your name. And Barbara. Welcome aboard. I look forward to working with you in the room. And yes, David, the software is $11.97 for the year, and the room is $147 for a month, monthly. You get the first month for free. Now, we usually run a deal on the room at annual, like, around Christmas time, Black Friday, we usually run something, right? And for the rest of the traders, you'll get, we still have spots left. Oh, he just sent me the lifetime. If you do a lifetime, you get 3 months in the room included. Nobody gives a guarantee. How can I give a guarantee? You're the one pushing the button. Okay. Anyway, So you'll get the money flow tracker auto trader, which I think $11.97 for a year for the auto trader would be a good deal. But you're going to get everything here because this is what I promised. You're going to get the auto trader. You're going to get the NDT, the market scanner, 1 month in the trade room, all the training tutorials, and you're going to get your software installed and coached by me, right? And you'll get the extra bonuses of the minute charts. So this is there's a bunch of different people on here, but this particular woman here, she was in a webinar just like you are, right? And she liked what she saw. She had a friend that, sorry, let me grab some water. Okay. She had a friend that was a trader, but the friend didn't want to teach her. She said, you know, you need to learn your own way. So she was in the webinar just like you are, and she really liked what Mark was talking about. So she contacted him and she asked him if he would help her learn how to trade. So of course, you know, we always are willing to help our traders. So he said, sure. So he took her by the hand and he taught her everything. It just says here, right line trading provided me with all the charts and software that I wanted. Mark taught me things, right? He sat her down in front of a chart, in front of a computer, and he showed her the setup. And she says, when you see this setup and it has a green background, I want you to click buy on up close. And when you see this setup and it has a red background, I want you to sell on down close. And that's what she did for like 4 months. Well, to make a long story short, she's a 6-figure trader now, and she doesn't trade every day either. And I spoke to her on the phone. And she says, if I don't have setup, I don't make trade. And that's exactly what she said to me. So this was a email sent in to Rightline from David, another David P. I call him. We have like 3 or 4 5 Davids in the room, so we use their last name. Anyways, to make the long story short, it says, started watching David's room, and this guy contacted me in the webinar, and he said to me, I am the world's worst trader. I just can't seem to make money trading. I've tried everything. He said, I really like what I see. He said, but I'm willing to give it a shot. Will you help me? So I said, sure, no problem. Right? So he sent this email in about a month later, or maybe 6 weeks later. And he said, I started watching David's trading room every morning and learned his trading methodology. And more important, the rules for trading. We only take specific setups, and when we follow rules, we have a success rate around 70%. So this says I now have 7 Apex accounts, which now he has 15 Apex accounts, and he has 11 accounts at Buell Knox. Right? So, and this is a guy that says I was the world's worst trader, and I'm thinking about quitting. Right? Then he says the money flow tracker software, along with David's methodology, allows me to act like a robot and eliminate guesswork and emotions from my trading. We use the NDT, which allows a single push button to enter the trade when you see the correct setup. So following the rules every day, it's simple. C setup, push button, C setup, push button, C setup, push button. So he's looking at it this way. If he sees the setup and it's a qualified setup, he takes the trade. If it wins, fine. If it loses, that's fine too. If I take a trade and it's a loser and it loses, that's fine because I followed the rules. And just because the market didn't follow through, I have no control over that. I had my setup, my high probability setup that I trade all the time. Just the market didn't follow through. It happens. So again, we're doing $11.97 for the year, $19.97 lifetime, $3.97 for the monthly. And Roy just said anybody that signs up today from this webinar will get all these extras included. We're not going to limit it to 10 people. He said, we're at 9 now. He said, but everybody that sat in this webinar, we're going to give them this opportunity also. So there are days where the auto trader takes a trade and I make my whole day just on the auto trader. And I don't take any money flow tracker or other trades. Actually, I'm finding that the auto trader works better on NQ than trying to trade NQ on a smaller time frame. So that's all that I have. So anybody that's interested, put your name and your phone number in the questions box. And either myself or Rory, most likely Rory, will call you after the webinar. And you can ask as many questions as you want, because I know a lot of you have questions. Oh, I see Kim in here. She's in the room. I know that a lot of you guys have many questions. And honestly, when I bought the software, I contacted them, right? I contacted Rightline. I did my purchase over the phone because I had questions and I wanted to know more about certain things. And that's why we ask people to put your name and your phone number, and we'll call you after the webinar. And we will, help you out. You have no obligation to purchase. Yep, Terrence, it did load up right here. I know you want to see it, so I'm going to show it to you. So look, let's see. This was the morning, right? Very choppy, right? A lot of up and down, up and down, up and down. Right? Then we had this move around 10:15. See, the only problem with loading up a chart when the market's closed is the wicks that are inside the candles don't stay in the history, and that's a Ninja Trader thing, right? So let's go forward here and let's look at this afternoon, right? So here we go. We got the C2, we got the colored background, we have everything lined up here, and I don't know what the MA diff would have been. So from looking at here, let's say we took this trade, right? And we took it on the second candle because I don't like to go long on a red outline candle. Okay, if the candle's telling me there are more sellers in this candle, why do I want to go long on? I prefer to go long on a green candle, and I prefer to go short on a red candle. So we would have entered right about there, and it went up, and probably the MA diff was starting to get a little high here. So let's say you just exited when you lost the background color. That's 67 ticks on that trade. Here's an even better one. And so I know this was a pullback candle because it was red. So look, it broke the pivot. Remember the pullback and go strategy? Broke the pivot. This is the 3/4 candle that cleared the pivot. Here's a red candle. So I know there's got to be a wick. This is the entry, 1 tick above here. I would have gone for this target, higher time frame resistance, right? Which it came close. It didn't exactly hit it, but I would have had my stop most likely. I usually trail it a candle back. That's 40 ticks. Right? Nothing here, nothing here. This wouldn't take this because it's trading into there. This one here wouldn't take this because we don't go long under the VWAP. And there were a few trades, not very clean, but that's the chart. So that's what you wanted to see, Terrence. That's what I wanted to show you. Here is a couple of trades on MNQ Auto Trader. Now this will blow your mind. Is this today? Yep, September 11th. So this morning we had nothing. It was just choppy. We got this big sell-off, but it won't take this trade. The Auto Trader won't trade into here, won't trade into here. And if there's not 81 ticks, it won't take this trade. And as far down here, MA diff would probably be too high. But look at this afternoon, right? After lunch, I usually don't trade between 12:30 and 1. So look, after lunch, it broke 19,000. This trade wouldn't have taken this trade because the MA diff, I'm sure, was too high. It would have taken this trade. And the trade would have been taken on this candle, right? And if we exited on line change, 181 ticks. Here's another one. That was pretty much it for the day. So, okay. So anyway, want to welcome Terrence also to the room. Terry, You prefer Terrence or Terry? Great, Terrence. All right, great. Whatever you need, I will be there to help you. I'm there to help everybody in the room. Kim is in here. Kim F is in here. Um, she's in my room every morning. I see probably 3 or 4 people. Most of them are newer people that are in here from the room, you know. But okay. All right. So welcome, Terry. And that's it. That's all I got. I went about 6 minutes over. Uh, what is my value on the Unirenko? I'm not really sure because I can't open up that data window right now. But contact, are you a member? Do we have the money flow tracker, Abby? Oh, Rory says you do have it. So it's 820, no, it's 2460, 120 on the swing trader. All right. All right, everybody. Thank you, everybody that signed up. I look forward to working with you in the room. You will be surprised. You know, here's the biggest thing with most people that come into trading with the money flow tracker. It could be boring. Trading can be boring. We're waiting for setups. And that's what we do. We wait for our setups. When we get our setups, we take the trades. So a lot of times if the markets are choppy, we don't take a lot of trades. And you don't have to take a lot of trades to make money. There's lots of days I take one trade and make, look at it this way. If I'm trading 6 accounts and I have one trade that I make $500 on, I just made $3,000.